Hey, welcome to the Guaranteed Retirement Guy Show. My name is John Stevenson, and I'm going to answer the question, are annuities FDIC insured? Well, here's the thing with annuities. They're like stocks, bonds, ETFs. They're things that you own. And because of that, they are not insured by the FDIC. Okay. Things that are insured, of course, are things that are deposited. Okay. The FDIC does insure bank accounts. They insure CDs, right? Because they are on deposit. Okay. But with annuities, you may not have the FDIC insurance, but you do have the State Guarantee Association, which protects them. And insurance companies pay into this every single year. And they are usually insured up to the $250,000 mark that the FDIC offers. Some states actually offer more. Like right now, as of this recording, Florida offers $300,000 and Connecticut actually offers $500,000 per annuity company. Okay. So if you want to spread it out, like let's say you're like, all right, I want to make sure that I'm covered, then you could put like $250,000 into 4 separate companies. Okay. You can't put $250,000 into the same company into 2 different contracts. If it's still under your Social Security number, they're still only going to be insured for that $250,000. Okay. But a lot of people have a lot more than $250,000. So what do you do about that? You're like, well, I don't want to put this in like 5 different contracts. If you're going to do something like that and you're worried about the soundness of that annuity company, then pick a company that is A-rated, A+ rated. I mean, you've got North American, you've got Corebridge, you've got Midland, you've got Allianz. Allianz is the largest annuity company in the world. They've got like $3 trillion in assets. So when you've got these companies that are A-rated and that have been around for like 100 years, then I usually feel a lot more comfortable putting in higher amounts. Okay. So maybe it's 500,000, maybe it's 750,000, maybe it's 2 million. Okay. If you're looking to put a higher amount in, work with a company that is reputable, that's been around for a long time, that's A-rated, and has a lot of reserves. Okay. I had a guy put in 1.2 million into Allianz for that very reason. Okay. He wanted to make sure that it was with a very, very strong company that's been around for a long time. Right? Companies that have been through the Depression, through war, through the savings and loan crisis. Okay, that's super, super important. Now, the other thing you need to remember is, yes, you do have $250,000 in your bank account that is FDIC insured. Okay, but remember, that bank is only required to have 10% on reserve. Why is that? Because they want to lend all that money out, right? So they're doing that and they're doing risky things. And so the US government is willing to step in and insure that, right? So insurance companies, because they are not FDIC insured, they have to have higher reserves, okay? They don't have that 10% requirement. It's more like 80 to 100% requirement. And I say 80 because a lot of the B++ will have 80% reserves versus 100% reserves that maybe an A+ rated company will have. So the higher the rating, the higher the reserves. Okay. And so that's important when you're selecting an annuity product. If you're worried about the company going bankrupt and you want to make sure that your money is preserved, especially if it's above the State Guarantee Association's amount, then you should consider looking at a company that is strong enough to take in the higher premiums. Okay. So it's important to look at that. I mean, with any investment, you got stocks, bonds, they're not insured by anything, right? They have risk as well. So when you've got insurance companies, and of course, you're talking to the guy that talks about guarantees. I love guarantees. And so when I look at guarantees, I look at insurance companies that have life insurance, that have annuities, right? These are things that have stood the test of time. Some of them for well over 100 years. I mean, annuities, they've been around for 500 years. Okay, so when you have something like that that is really set up to be your pension, set up to protect your retirement, you have to have a very highly regulated industry to protect you. And so if you look it up, you'll notice that the insurance industry, the annuity industry is actually more regulated than the banking sector because they have much higher reserve requirements. They have higher requirements because of who they are dealing with, retirees. Okay, with banks, they're like, you know what? We're covered by the US government. So if we go bankrupt, who cares? They're going to cover you, right? They are not as regulated. That's why the insurance industry is. That's why we buy insurance on our house, okay? We know it's a contract. We know they have to honor it, right? It's so important, for our house, for our life insurance, and of course, an annuity, all that is insurance on your retirement income. You are insuring yourself against longevity risk, right? Because that's what insurance is. It covers a risk, okay? And it has to be a real risk in order to be insurable. And so when you buy an annuity contract, you're using a portion of your assets to insure yourself against longevity risk, to make sure you have guaranteed income, make sure you have pension, okay? If you got Social Security and maybe you got a small pension over here, you need to bridge the gap with another annuity or maybe a series of annuities. And that's what you do. You stack your income with these annuity contracts with strong carriers so that you have your income guaranteed so that you can then take the rest of your money, put it in either the bank account or your risky investments. And if you lose everything over here, you've got your contracts in place protecting you, okay? They're of huge value. This is why Babe Ruth put his money into annuities in 1923, because he wanted to make sure that his income was covered. And of course, he lost everything in 1929, except of course, his annuity contracts, okay? Shaquille O'Neal, he bought millions and millions of dollars worth of annuities for himself and his family. And he's an avid investor. He loves investing, okay? He's very, very good at it, but he also understands the importance of safety. He also understands that annuities are not FDIC insured, but he's willing to put his money into safe investments with certain annuity carriers that are strong so that he has his income needs covered if things go south with his other investments. So anyways, hope that helps. I just really wanted to go over that because I get that question all the time. Is it FDIC insured? And I always tell people no, but you have all of this. You got the reserves. You got the State Guarantee Association that's covering it. You've got the higher regulations. You got higher reserves. You got so much going for it. And of course, if you want to work with a company that's A+ rated, that's been around for 100 years, that's got $1 trillion in assets, then we can do that too. Okay. It's all about safety. And of course, when you've got safety, then you can think clearly with your other investments, especially when things are going south. You can still make the right decisions to stay in your positions because you've got your annuity contracts, okay? So I hope that helps. I get a little excited about guarantees because I think it's very, very important for a portfolio for someone, especially when you're getting older and you want to make sure things are covered, you want to retire, you want to enjoy your retirement, not have to always be looking at the stock market. You definitely should consider an annuity to take care of you, okay? So if that makes sense and you want to book a call, there is a link below this video and it goes straight to my calendar. Okay, we can chat. We'll talk about your unique situation. And if an annuity is right, great, I'll sell you one. I'd love to help you. But if it's not, I'll tell you that too. Okay, I don't care. I want to make sure that you're getting what's best for you, not what's best for me. Okay, don't buy an annuity because the guy's trying to sell you one that's paying him a ton of commission. Okay, do not buy an annuity from someone like that. Buy an annuity for the contractual guarantees that it provides. Buy it with a reputable carrier. And also make sure that agent is showing you everything, regardless of what he is getting paid, okay? That's so important. There are so many advisors that will not do that, okay? I do that. I show you everything that's available. I do not care what I'm getting paid. Well, of course I care what I'm getting paid, to be honest. But guess what? I'm still going to show you everything that's available because I want to make sure that I earn your business because I know you're going to be able to look it up elsewhere and you're going to know whether or not I'm sharing the best product for you. Okay, so I hope that makes sense. I hope you like and subscribe to my channel so you can get all of my valuable content that I deliver each and every week. So thanks again for watching, and we'll see you next time.